Thanks a lot for that. Well, let's talk about a couple of stocks then that are reacting to its numbers. Let's start off with the biggest gainer on the Nifty. That is Coal India. Well, the numbers actually were very mediocre or pretty much in line. The good news was their dividend that they've announced, close to around 15 rupees. The street was baking in good dividend for the year, but not so soon. So I think that's something that's got the street excited. Otherwise, you look at the numbers, the top line, the margin performance, as well as the profitability, all of them a little bit lower. The key reason was the blended realization came in sub 1800 rupees per ton. Most on the street were working with an increase around that 1850 to around 1900 rupees. Also, the contribution coming from the e-auction volumes, well, that's come down to only around 7%. Remember, that's the bulk of their profitability. So that clearly hurt them. Employee cost as well spiked up in OBR. That's the stripping ratio out there. That is a non-cash expenditure. That went higher, but that's giving visibility on future production. The dividend payout of around 15 rupees, that's something that surprised the street positively and explains why that's the big gainer on the Nifty. On the flip side, Hindalco is reacting to Novelis' numbers. The numbers were out late last evening. And no worries on the numbers. Whether you're looking at the absolute EBITDA or the EBITDA per ton as well, $515 per ton, most of the street were working in that vicinity. However, the management on the con call, they said that the EBITDA per ton could soften from here on by close to around $75 to around $100 per ton. That would mean that for the next 2 quarters, the EBITDA per ton will come down, say, to around $420 to around $450 per ton. That's something that's disappointed the street because they're sitting on high-cost inventory. You have input costs as well that have spiked up. Though the management reiterated that in the longer term, they're sticking to that $525 per ton. The capex, though, they have pulled back a little bit, which is good news otherwise. Otherwise, they were at around 1.3, 1.6. They pulled back to around $1 billion odd. And the net debt eked up a little bit, though they suggest that in the second half of this year, we'll see some cooling off on the working capital front as well, which could bring down this debt as well. So Hindalco, the big loser, Coal India, the big gainer.
Okay, 2 stocks at the opposite ends of the spectrum, right, that you're tracking this morning. Well, for the market, it's absolutely flat, but a lot of stocks are gaining ground. TVS Motors now surging away, 5% high on that stock. It's had a dream run this year, up almost 85% for the year, and it's had good set of numbers as well. So TVS Motor looking pretty good, and a couple of others as well, the likes of KRBL picking up a bit of pace. So there's lots happening in the broader markets. Don't be fooled by the flat headline index. Let's slip into a quick break. On the other side, it's the economy coming up. Morgan Stanley is betting big on India. Lata will get chatting with Chetan Iyer of Morgan Stanley to explain the economic rationale behind this bold bet. Stay tuned.